Hi guys, welcome to my YouTube channel. And yeah, obviously you can use this strategy on both crypto and synthetic pairs. That's the good thing about it. So let me just, yeah, so you can see these two boxes or zones. Some people would like to refer it as demand and supply zones, which it can be too. Obviously we can call this the supply zone, we can call this the demand zone. So I drew these zones or boxes are predetermined. The levels are predetermined. So I draw them before my price come or before the market opens. Let me put it like that. So these zones are predetermined. So they are being drawn. I draw them before price meets or comes to that area. Because if I draw it after, then it's of no use. I can't take trades if I draw the boxes. I don't know if you understand what I'm saying. So let me just explain further. Now market started from here after Sunday night, start going. When price comes hit to this zone, this we're calling it the supply zone, right? So when price comes to this zone like this, boom, we're expecting either a retracement or pullback. This is a retracement is like the market wants to rest a little bit before continuing from where it stopped in the original direction of the trend. Now this is a retracement in which our sell will be a sniper entry from this place to wherever it is, 12 pips, which is perfect for a scalper. 12 pips, trust me, 12 pips is perfect for a scalper. 12 pips you're out. Or we're waiting for price to come here. Let me just change this to what? Black. Waiting for price to come here and reverse just like it did here. I'm sure you guys can see this. So two things are involved when price comes to these two boxes. Either it comes, hits the box, retraces, in which we take our sell or whatever, if it's here they buy, or price comes here, it reverses. Now you can see that this strategy is good for both scalpers and swing traders. Swing traders that like to leave their trades for a long period of time or want to catch a higher amount of pips in a single trade. You can check this amount. This is like what, 46 pips, which is a very good amount of pips. 46 pips for a swinger or a person, someone that swings, sorry. And then for a scalper, you're out with 12 to 15 pips. And this would have been a very perfect sniper entry. Now why I'm stressing on this strategy is because look, I've been in previous Telegram channels. We're now starting and coming up. I've been in previous Telegram channels where a signal provider will give you a signal. You take this signal and you see some signals having like an 80 pip stop loss. Like how on earth is a $10 or $5 account going to handle that or bear that? You understand? Because nowadays people know there's money in Forex, brokers know there's money, everybody knows there's money in Forex. But now everybody does not have $1,000 or $10,000 lying around to trade. So what people want to do is they want to try to that small income they're getting, they want to invest it in Forex and try to grow it, build it a little bit and cash out little by little. But now they encounter these signal providers that give trades with stop loss of 80 pips. Even with a $5 account and a stop loss of 80 pips, the lowest risk 0.01, only one position, your account will blow before it gets that 80 pip stop loss. Or you see other signal providers that will give a trade or a signal and the price will first move against them like what, 50 pip, 10 to 30 pips before coming down again, maybe retracing again and then moving back into profit. But small accounts will have closed off, margin call or whatever at this point. You understand? So that's the beauty of this strategy. That's why you appreciate this strategy now, because no single drawdown, nothing like, hey, price moved against my small account like 5 pips. There's no movement 5 pips, there's no movement of pips against. It's a sniper entry Once you enter, boom, just give it a minute or few seconds and you're already in profits, if not deep profits. Let me show you guys an example. You can see these previous boxes, so it's not as if I'm talking rubbish. You can see there are other previous boxes indicating trades that were taken. Now look at this, boom, this was our entry, boom, TP1 was here this week, TP2 was here. This is already perfect enough for a scalper. It's already perfect enough for a scalper. But now let's see what happens if you like to swing. Let's see what happens if you like swinging. Now notice what happened here. Price moved all the way up here, TP2, and started coming down, hit here. There was no break of structure. You understand? It never even came below this. It never even came below close to this blue zone, this demand area. I took this trade and I held this position from right here all the way up, which was somewhere here. This was like 52 pips or so, call it 57 pips. I'm going to show you guys why I did that, where the my Facebook page, where the screenshots are. You can see that I flipped a $70 account to 400 plus, no cap, honestly. So I took this trade, held it all the way up there, and you know I closed it because obviously I'm the one that drew this box. I know that there will be selling pressure from here when the market opens. So when this market was pushing up, I was already closing my trades. You understand? So I'll show you guys that one in a minute, but let me just, you see this, no drawdowns, no this. Imagine this risk to reward ratio. Imagine this. Other signal providers will give you a trade and it will first move against you like 30 pips, sometimes 50 pips before it starts moving in profit. Small account holders would have been gone by that time. The accounts would have blown. But look at this, boom, immediately you place the trade, you're already in profit. You can even close half here and then hold it all the way, boom, up to here. You're up like 60 pips. Now let me show you guys another thing. This is like risk to reward ratio. Where will our stop loss be? Obviously it won't be anything far away from the box, from this demand zone. So let's put our stop loss here, boom, and now our TP would have been at this area, at this zone that's right here, boom. Now let's check the risk to reward ratio. Let me just squeeze this. This is what 6.08, call it 6. Imagine a risk to reward ratio of 1:6. Who gives that? Sniper entries 1:6. A 1:6 risk to reward ratio. A sniper entry, no single drawdown. It's not as if there was price moved 50 pips again. No, instantly it moved instantly. You understand? So imagine this one too. Imagine this, see this trade now. You see how price came down, and I knew that this price was going to reverse at this. You can see I even drew the arrows. I knew that price will reverse at here. So you can see where my TP was. Boom, sniper entry, hit TP instantly and started falling down again, and even gave a second entry before falling down lower. But you would have been deep profit and your TPs would have been smashed at this point. So that's just it. Let me show you guys the sorry about that, the pictures on my page. So this is my page. I said from 70 to 400 plus, full margin. You can see it clearly. Let this stuff load. All right, see it. You see the entry. Sniper entry. This is 4-hour chart. You see the entry. Is a sniper. Let me put this chart to 4 hours so that you guys will know that. You see where you can see all these boxes. I drew them. all those boxes. Now the entry was like from here. Let me just hide all that stuff. You see how it is. It's the same double bottom that is there, and you see where I entered the sniper entry. Look at it, sniper entry. Let's see how much. From $70 to 400 plus. This was full magic. And the way you know that there was no drawdown on this account is that if there was drawdown, the amount of risk I applied, this account would have blown. And let's just check the last one. You can see the real account. Genesis FX. Xness allows you to put your nickname, so you guys understand. That's it. From $70 to 400 plus, just with the strategy. See, look at the entry. This double bottom, boom. TP, yeah. So that's just it.